despite the economic climate.
We continue to expect double-digit revenue and operating income growth in constant currency and US dollars.
So sales of Windows licenses to devices makers fell by 2% in the quarter. Hello, my name is Marc Drouinaud Jr. If you're new here, I do cyber-related videos. So Microsoft misses estimates, but stock up 5%. We gotta talk about it. So this story is courtesy of Jordan Novid at CNBC, right? So Microsoft shares rose 5% in extending trading on Tuesday after the software maker issued a rosy income forecast for the year ahead, despite issuing quarterly results that failed to reach Wall Street consensus. So here's how the company did it. Earnings, so $2.23 per share adjusted versus $2.29 per share as expected by analysts according to Refinitiv. Revenue, we have $51.87 billion versus $52.44 billion as expected by analysts according to Refinitiv. Microsoft turned in the slowest revenue growth since 2020 at 12% year over year in the quarter, which ended on June 30th, according to a statement. The company's earnings per share fell short of consensus for the first time since 2016, with net income rising 2% to $16.74 billion. With respect to guidance, Microsoft called for $49.25 billion to $50.25 billion in fiscal first quarter revenue. The middle of the range at $49.75 billion implies about 10% revenue growth, reflecting worsening PC sales and slower cloud infrastructure growth. Analysts pulled by Refinitiv had expected more at $51.49 billion. The company's implied gross margin at 69.85% was wider than the 69.30% consensus among analysts polled by Street Account. And for the new 2023 fiscal year, the company reiterated its forecast from 3 months ago, despite the economic climate.
We continue to expect double-digit revenue and operating income growth in constant currency and US dollars.
Amy Hood, Microsoft's finance chief, said on a conference call with analysts. She said Microsoft would lengthen the useful life of server and networking equipment to 6 years from 4 years. The company made a similar move in 2020. In the fiscal fourth quarter, the biggest challenge stemmed from worsening foreign exchange rates. Microsoft said that reduced revenue by $595 million and earnings by 4 cents per share. In June, Microsoft reduced its quarterly income and revenue guidance for income and revenue just because of rate fluctuations. Revenue and income for the quarter came into the low end of the ranges that Microsoft had put forward in June. Microsoft's Intelligent Cloud segment, which includes Azure Public Cloud for application hosting, SQL Server, Windows Server, and enterprise services, generated $20.91 billion in revenue. That was up 20% and below the consensus of $21.10 billion among analysts polled by Street Account. The company said revenue from Azure and other cloud services grew by 40% compared with 46% in the prior quarter. Analysts surveyed by CNBC had expected 43.1%, while the consensus estimate from Street Account was 43.4%. Microsoft does not disclose Azure revenue in dollars, but CEO Satya Nadella boasted about winning bigger Azure deals during a conference call with analysts.
We are seeing larger and longer term commitments and a record number of 100 million plus and 1 billion plus deals this quarter, Nadella said.
Microsoft's productivity and business process segment included Office productivity software. Dynamics and LinkedIn posted $16.60 billion in revenue. That was up nearly 13% and slightly less than Street Account consensus of $16.66 billion. The premium E5 tier accounts for 12% of all commercial Office 365 subscriptions, up from 8% 1 year ago, Hood said. The more personal computing segment feature the Windows operating system, Xbox video game consoles, the Bing search engine, and Surface devices delivered $14.36 billion in revenue for the quarter. Revenue was up 2% year over year and barely lower than the $14.65 billion street account consensus. Microsoft said search and news advertising, including traffic acquisition costs, rose 18% thanks to stronger search volume and revenue per search. Still, a contraction in advertising spending resulted in a $100 million cut to revenue for the search and news advertising and LinkedIn categories. So sales of Windows licenses to devices makers fell by 2% in the quarter. Technology industry researcher Gartner said earlier this month that logistical disruptions in the quarter had contributed to a 12.6% decrease in quarterly PC shipments, which is a key input for that metric. The company said factory shutdowns in China in April and May and a worsening computer market in June reduced Windows revenue from device makers by $300 million. Hurdles from exchange rates, advertising spending, and computer sales were relatively well understood among investors heading into the earnings report, said Peter C. I'm not even going to say the last name, who is a senior analyst at Vontobel Asset Management, which held $1.11 billion in Microsoft stock at the end of March, according to a filing.
The core franchises that represent what people are most excited about for owning Microsoft. So those were the more resilient areas, and they continue to shine, though maybe a touch of deceleration. But those parts of the businesses were certainly more reassuring, C said.
Microsoft saw $126 million in operating expenses tied to its decision to stop selling products and services in Russia following the country's invasion of Ukraine. During the quarter, Nadella announced that the employees will get pay increases and the company introduced services to help customers deal with security incidents. Excluding the after-hours move, Microsoft stock has tumbled 25% so far this year, compared with a roughly 18% decline in the S&P index of US stocks. So, Netflix and Microsoft, we gotta put our money in that. Please feel free to watch, like, and comment other videos on this channel. Subscribe now.